So the formation is just very simple. Okay. It's a high, a second high, and then a third higher high, right? Then you should get some sort of sell off. And if it leaves behind an imbalance, that could be the retracement to go lower. So it's just a simple one high, higher high, and then that third higher high. So there's different names for this. And one of the original names is the Three Little Indians. So, I'm not going to call it that personally. But if it's just a simple 1, 2, 3 formation at a, let's say, higher time frame, objective, right? Or maybe it forms, that 1, 2, 3 formation above an old high. If you have opposing liquidity that it could meet, equal lows, low resistant lows, something like that, that's an easy way to see that the market has made a high. So retracements after that, can potentially be shorts to go lower. Now, in the example, or well, in what I looked at this morning on NASDAQ, I posted in the Discord talking about the lows, right? The formation here is kind of warped. So in the traditional sense, like this would be 1, this would be 2, and then this would be 3, like close together, right? It is a little distorted, so I'm not really going to use it that way, but I'm more so going to use this right here, right? So there's a high, and then that higher high, that's not a liquidity run. Even though it does retrace, it taps into liquidity, then trades lower. And there's a reason for that too. This is equities, right? So equities runs pre-market high and then runs it more that second time here. That second time during equities is that third higher high. There's your breakdown, and then there's a retracement to go lower. So again, not the greatest example, but it's there. And then the inverse can be said for lows. One low, lower low, third lower low, retracement, or excuse me, like let's say a break of structure, you guys look for that shit, or some sort of imbalance or whatever, retracement to go higher if there's opposing liquidity. And then again, this isn't the cleanest example, but you have one low here, a lower low here, and then a third lower low. It rallies, there's a imbalance right there, and we take off. So it's like that. Okay. Doesn't really break structure or anything here, but on a small time frame, it leaves that there. And that was a divergence here too. If you remember from earlier, but in the video, I'll just tell you, I think SPY was lower, or the regular trading hours for NQ was higher here, where regular trading hours for ES was lower. So that was a stop run on ES, and that was accumulation on NASDAQ. And then you get your run higher. All right. So that's all it is just one low, lower low, third lower low, or like I mentioned a second ago, a high, a higher high, and then a third higher high to go lower, but at something that is important on the higher time frames, or like for this example, this was equities, but this was a pre-market high. Okay. And it had opposing liquidity because we had whatever that low is down here. That's London's low. And this was the current low for equities. Those together make low resistant lows. And that's why that was easy. Right? So drop a 1 if that makes sense. Especially for the ones that haven't, like Amin, or I think Natasha asked about the 1, 2, 3s last week. I don't remember off the top of my head, but I know you guys have been asking me about that. And I just want to make sure that everybody's on the same page now. It's just simple. 1, 2, 3. Right? If you can count to 3, you're good to go. Okay? I try to keep things as simple as I can. You don't want to overcomplicate it. And it's just a simple formation or a simple pattern that repeats itself, but it's got to occur at the right places. Okay. Like, see up here. So, like, for example, not that I didn't do this because I still want higher pricing on the day, but for an example, there's a lunch low. Your afternoon session starts here. So the PM session starts and rallies higher, right? But what's it do? You have a high, you have a higher high during lunch, and then you have your third higher high during the PM session. We trade lower, at least behind a gap, and an imbalance right there to seek lunch's low. So like that to me is fairly tradable. I don't know what your RR would have been on that. Probably not a lot. Probably a 1-to-1 or 1-to-2 at best. But it's a simple example that occurred, today. 1, 2, 3, lower for lunch liquidity. How far can price go below a low? I think I mentioned this earlier, but there was all types of imbalances in here, in which many of them have been met already. That one there, we blew right past that. And then there is one right here, that lack of wick right there too, which we traded into. So if you were looking for an extension lower, those could have been later targets, but